All right. We should be up by now. By the way, if you chat me on either YouTube or Twitch TV, you can find me. I can see your chat. I was able to put it into the live broadcast. Okay, cool. Looks like everything is in fact working. Okay. Just making sure everything's working right now because I've been having a couple issues. For whatever reason, it doesn't want to capture Chrome properly, so I have to do those things. Let's do browser. Alright guys, we're starting a new stream. First of all, let's pick the two winners today. So far the two winners today will be number 14, congratulations, and number 13, also congratulations. If you're wondering what those people are, number 13 and 14, they will be one SM4JGWW, that's the start, and then one NQDGNIX for the start of those numbers. So congratulations, I will get those numbers to you as soon as this stream is over. So aside from that, we're going to go into my FreeBitCo account. Thank you very much. We have the bonuses rolling so far, and currently we are earning about almost 2,000 sats a day. We're just a couple days away from getting 2,000 sats and rising. I'm right at that point where I'm again making about a Satoshi a day. I want to thank everybody who's part of my downline, and anybody who is part of it is always automatically entered into my daily, weekly drawings. Remember, if you want to be part of the $10 drawing, you have to comment and like my YouTube videos, because that's the only place where I unfortunately have a way to look at your comments and choose a random winner. You can also support me on Twitch if you'd like. I'm also hypersonic, so go look for me, and I hope to see you. Now let's move on to the actual topics at hand. Alright, so we have the price of Bitcoin has been very interesting for the past little while here, so let's look at the 1 week, for example. So we've been hitting kind of a like we hit this low where we went down to, the 100s, 200s, and there's just a lot of, little things going on right now. We've had ETFs being approved and rejected, bunch of different things regarding just whether or not institutional money is going to come in or not. Personally, I think they're waiting on the sidelines to get fed, and when they do, it will either go up or it won't. But mind you, in 2 years, or less than 2 years at this point, we're going to hit another halving of the ability to grab Bitcoin, and when that happens, the price will go up. So it's only a matter of time. Until then, there are a bunch of interesting stories, like we had a couple weeks ago, the CEO of PayPal talking about how Bitcoin was a scam and all this kind of stuff. Again, as these same people are buying it, which is nuts, as far as that is concerned, if we take a look at the larger graph here, now we can see that from the peak, it's been slowly kind of going down. Just some very light analysis going on here. But notice as we get to this base, and it's been around the same area this whole time, it gets to about the 6,000 range. It just kind of stays there. And the reason why I personally believe that that's happening is that, I got in at about 1,500. I meant to get in at around 700 or 800, but unfortunately I was moving overseas at the time, and it was nuts. But essentially, what happens is the people who invested right around the 1,500, 2,000 level were still basically early investors who actually believed in the technology but didn't quite hop on board. And this is the hold on for dear life people who are doing that. So those people are still here. They're all in that $4,000, $5,000 block. So there is a chance it could go lower, but the bottom is pretty clear. This is the point of resistance where the people who are just going to hold it are just going to hold it. And no amount of FUD or marketing is going to dissuade people from doing that. And it's kind of interesting because Wall Street and a lot of people want Bitcoin to be a bubble. They want it to be a fad. But what this has proven to them is that no, actually, where there's a will, there's a way. It's kind of funny. Like, they can only get it so low. Not to mention that, there's already, 15% of Bitcoin or more has already been lost or discontinued. So the price is becoming more rare as we go. It's not like it's going to lose value and disappear any one of these days. It's funny when I talk to people who don't really understand Bitcoin, and what I get all the time is like, well, didn't it go down? Like, didn't it crash? Like, not really. Like, I let them know when I got in, and it's made about a 300% gain if they actually track it, and they don't know what to do. Like, what they want to, there are so many people who come out of the woodwork who want to be like, oh, it's just a scam, it's just a fad. But the truth is, I've only made money with it. So it's kind of like, and even now, I'm still only even if it went to 1,000, I'd still be making more than if I put that money in a bank, which is kind of scary. But hey, whatever's, it is what it is. It's technology, it's exciting, and moving on. So I wanted to talk about some articles with you today. Just found some, just what's on the highlight reel. This is about centralized cryptocurrencies. Are they dominating the market, and how does that relate to Bitcoin? These are not my opinions. These are just articles I'm going to read to you real quick. The majority of cryptocurrencies can be classified as centralized securities. Cryptocurrency research firm CryptoCompare released annual crypto asset taxonomy report, and their findings reveal that only 16% of cryptocurrencies are fully decentralized. The remaining cryptocurrencies reviewed are either centralized or only semi-decentralized, suggesting that the development team behind the projects have some leverage to influence the protocol underlying the asset. So like withholding accounts or freezing transactions, things like that. It could get even worse than that, like possessing, possibly. While the original cryptocurrency that started it all, Bitcoin, was designed by the mysterious Satoshi Nakamoto to focus on decentralization and removing the control governments have over existing fiat currencies, the industry he or she created is increasingly trending towards centralization. The report outlines how the trend is largely driven by rapid growth of new utility tokens running on private servers. Only 9% of all utility tokens were found to be sufficiently decentralized. Cryptocurrencies that function primarily as a means of payment, such as Bitcoin, Litecoin, Stellar, and others, are among the most decentralized types of crypto assets. Financial assets such as those born from initial coin offerings, ICOs, are only 7% decentralized and are more often than not classified as securities. According to the report, CryptoCompare classified the assets using guidelines set forth by the Swiss Financial Market Supervisory Authority, FINMA. What about Bitcoin, Ethereum, and XRP? Which crypto assets are properly decentralized, or what assets can be deemed as securities, are a hot-button issue for cryptocurrency investors. Bitcoin was recently ruled a commodity by a U.S. District Court Judge and Jay Clayton, chair of the U.S. Securities and Exchange Commission, the SEC, has gone on record stating that Ethereum is no longer a security, even though it may have started its existence as one. XRP, the native crypto token of the Ripple protocol, is often used as an example of a crypto asset that claims to be decentralized, but is arguably not. Investors fear that Ripple Labs' ownership of the bulk of XRP supply puts the token at risk for being deemed a security. Ripple executives have repeatedly refuted claims that XRP is centralized, and often point to China's dominance over Bitcoin mining as a way the number one cryptocurrency by market cap has become increasingly centralized. Recent reports conclude that as much as 74% of Bitcoin's hash power is derived from Chinese mining pools like Bitmain. However, given the fact that the mining pools controlling much of Bitcoin's hash power are separate entities, Bitcoin remains sufficiently decentralized. Bitcoin was created by Satoshi Nakamoto in 2008 in the wake of the global financial crisis. Nakamoto designed Bitcoin to be decentralized in an attempt to remove the control over the world's finance that the banks, governments have long enjoyed. So that's pretty interesting. There are a lot of coins that are decentralized. I believe the Winklevoss brothers have just released one where they have a lot of the same powers. There are too many problems when too many things are centralized. But even the coins that are decentralized, like Bitcoin, the mining factions have a lot of power. Like if you were to get the majority of hash power in Bitcoin or one of the decentralized coins, you actually would gain a bit of power. Like if people don't appease you, you might just shut down the network. So we would hope that miners have a bit of an altruistic look and they're for humanity as much as they are for profit. But hey, we'll see what happens. Crypto can reach 1 trillion market cap based on speculation alone. So this is for the other side. So we just talked about the low and the hold on for dear lifers and what that could mean. But we also have the speculators. So I honestly believe, this is my opinion before we read the article, that speculation in and of itself is actually what's keeping the price of Bitcoin down. Because if people just held onto the coin, the price would go up. And it would be that simple. And if you hold onto it and transact with it, the price would simply rise. And that's pretty much what the case was all of last year, when only the online exchanges were actually giving out cryptocurrency that you could buy it with. As soon as you have these other markets like the futures and even some of these ETFs coming out, it allowed for other mechanisms and over-the-counter transactions and all this kind of fun stuff to manipulate the market. So, I mean, whatever. We found I believe we're at the bottom, but who knows what happens in the future. Let's see. During an interview with, this is not my opinion anymore, during an interview with Ron Nooner on CNBC's Crypto Trader, Coinbase's alum and crypto investment firm One Confirmation founder Nick Tamino stated that the valuation of the crypto market can reach $1 trillion off speculation alone. He said, "I see investing and speculating as adoption. I think it is possible that crypto gets from 200 billion to several trillion on just that speculation. From my perspective, what I'm seeing globally in terms of viewing this new investable asset class, I think that's possible." In 2017, cryptomania initiated by individual investors and retail traders led the market to achieve a valuation of over 800 billion, and with the entrance of institutional investors, a multi-trillion market cap could materialize. Important macro trends. Shifting from authorities to trustless alternatives. According to Tamino, an important macro trend that could lead to an influx of investors and capital cryptocurrencies or consensus currencies is the decline in trust towards government and large institutions like banks. Various studies conducted by Facebook Research and major technology conglomerates have shown a clear trend of millennials shifting away from legacy systems to innovative and trustless alternatives such as fintech applications. In the long term, he explained that a cultural and gradual shift from trusting large institutions to peer-to-peer systems could direct consumers to decentralized financial networks. My view is that the most important macro trend of our lifetime is people increasingly distrusting governments and large institutions. I see it more as a kind of gradual movement into crypto. I think it's kind of a gradual and cultural shift from people trusting large institutions and governments to using blockchain. Currently, the cryptocurrency market is growing exponentially in terms of infrastructure, adoption, and institutionalization. The structure of blockchain networks are seeing progress in scalability, stability, and security, fueled by active open source developer communities and ecosystems. Tamino stated that the infrastructure and middleware used in the cryptocurrency sector are rapidly improving, allowing market to stabilize and appeal to accredited traders and institutional investors. At the same time, what I'm seeing in terms of real adoption is mostly infrastructure and middleware being built to fuel real applications. That's things like scalability solutions, stablecoins, decentralized exchanges. Gradual process. Institutions that include hedge funds, pensions, and family funds will likely not trigger a similar trend of fear of missing out or FOMO individual investors demonstrated in the late 2017. As large capital hits the cryptocurrency market, though, over-the-counter (OTC) brokerages and custodian solutions offered by the likes of Coinbase, BitGo, Fidelity, and Goldman Sachs, the cryptocurrency market will gradually see a rise in liquidity, volume, and trading activity. Billionaire investor Mike Novogratz emphasized that if institutions start becoming comfortable with the asset class, an unlikely trend of FOMO is triggered. It could grow the valuation of the crypto market by many trillions of dollars. So just another what happened last year, but on steroids. It won't go there. It won't go there, 20 trillion right away. What is going to happen is one of the intrepid pension funds, somebody who is a market leader, is going to say, you know what? We got custody. Goldman Sachs is involved. Bloomberg has an index. I can track my performance against, and they're going to buy. And all of a sudden, the second guy buys. The same FOMO that you saw in retail will be demonstrated by institutional investors. So, that's pretty cool. And we have one more article for you today. Pantera Capital exit. Cryptocurrency markets could increase tenfold by 2020. Cryptocurrency markets could increase 10 times over from 2020. Blockchain investment firm and hedge fund Pantera Capital's co-CIO told Bloomberg Tuesday. Speaking in an interview, co-CIO Joey Krug said that scalability and performance for Bitcoin were essential to spark a shift in the deflated prices seen throughout this year. These are all markets, and if so, you don't have scalability. You don't have market makers. The comments came days after new developments on the institutional trading of Bitcoin markets, with Fidelity Investors revealing it was testing a regulated custody solution for investors and hedge funds. While reactions from finance figures such as Galaxy Digital's Michael Novogratz were positive, the news failed to shift market sentiment or prices in Bitcoin. For Krug, this meant sentiment requires signs of adoption of Bitcoin in the current climate, which in turn depends on capacity improving. To that end, however, the executive voiced doubts about Bitcoin itself ever being able to compete with payment networks Visa and MasterCard. I don't know if that will ever happen for Bitcoin, but I do think we'll see blockchains as fast as Visa or MasterCard within the next couple of years. He continued, adding that such improvements could nonetheless spark 10 times price increases in 2 years' time. Developers continue work on improvements for the number of transactions Bitcoin can handle, principally through off-chain solutions such as the Lightning Network. The downturn in crypto markets since late January 2018 has meanwhile meant Pantera has seen its fortunes tested in recent months. Earlier in October, releasing statistics showing its digital asset fund was down over 40% since its inception. Cool. My personal thoughts on adoption are that a lot of community members, when we had the several forks, Bitcoin Gold, Bitcoin Cash, and all that, that really shot Bitcoin in the foot. I mean, it still rose to 20K, but what it did is it divided the community. So you have a bunch of, cheeky fellows who are in the Bitcoin Cash side. Whether or not their solution worked or would work or is working now, you divided the community. So, by dividing the community, whether you can, there was a debate between Roger Ver and Tone Vase on a cruise ship, and I was just watching it, and I saw Roger Ver. And he's touting like, oh, I bought this cap. I bought everything that I'm wearing except for one thing with Bitcoin Cash. And I'm sitting there like, yeah, and you're still dividing the community. So your Bitcoin Cash is still worth, 1/5 of what Bitcoin is worth. The whole point of decentralization is to work as a team to go against some of the other forces in the world that keep people kind of down and broke and all that kind of stuff like that. That is the grassroots reason for decentralization, the reason why people have been adopting Bitcoin, and you're actively fighting against it by literally talking about something that Bitcoin can already do. Mind you, there are scalability issues, but we could have resolved this without the debate splitting the coin, and therefore the community, and therefore people's resources and money, and etc. Not to mention he did buy Bitcoin.com, so when you go to Bitcoin.com, you're actually buying Bitcoin Cash. Just a lot of terrible things that it's just needless drama in what could have been a much larger and meteoric rise. But hey, you know what? That's greed and that's pride. What are you going to do? But yeah, I mean, as far as adoption's concerned, our hash power, I think, has doubled this year. So even on a fundamental level, we can handle more transactions than we could last year. Bitcoin is an amazing, amazing tool for transferring money, an amazing tool for just quickly doing things. That's why you have people like the CEO or the former CEO of PayPal, shaking, trying to denounce it as this illegal thing, as this degenerate activity that nobody would ever do because they're scared. And it's funny, speaking of, there's some arguments about that I've heard about against Bitcoin, whether it be well, how do they determine the price? Well, a lot of people don't understand that you have all these precious metals that are mining Bitcoin. So you have graphics cards by the tens of thousands that companies have bought in warehouses that are mining this coin. They're precious metals. They're actually backing the cryptocurrency if you really think about it. And so there's this whole market that Bitcoin has generated. That's why when you go to buy your graphics card for your computer, it's like $10,000, or excuse me, not $10,000. It's about $1,000. It's just really interesting to see, like, well, it's backed by nothing. Well, at this point in the game, it is, and that's actually a false statement. So, that's one thing you can say to your friends. If like, well, how is the value derived? Well, A, it's rare, it's deflationary, it's backed by precious metals, and the difficulty to grab it's going to double in a couple of years, and it'll make it even more valuable. Anyway, thanks for listening to me ramble on, people. Congratulations to the winners. I'll be transferring that Bitcoin to you very soon. And please stay tuned in the future. I want to do these a couple times a week. I'm still working with the new schedule, so I'm not sure how that's going to look at the moment. But as soon as I nail it down, I will get back to y'all. Anyway, see you soon. Have a good one.